Hey everyone, Randy Ahmad here. Thanks so much for visiting my channel. And in today's topic of discussion, I interviewed Phil Clark of Enterprise Title. Topic of discussion is what title companies do and how they help facilitate a transaction, bringing buyers and sellers to a successful close. So to that, let's go ahead and get started. And if you have any questions, please feel free to drop in the questions in the comment section below. Again, thanks so much for being here, and I'll see you at the end of the video. I've got Phil Clark from Enterprise Title over here with me, and the topic of today's discussion is going to be title companies, what they do, and how they facilitate the buying and selling process of homes. So without further ado, Phil Clark.
Thanks, Randy. Thanks for inviting me to be on your website today. So I'm the owner of Enterprise Title. I've been in the business over 30 years. And where a title company fits into a transaction is they're the third party who has no skin in the game. You know, we're not a buyer, we're not a seller, we're not an agent. So it facilitates and gives the parties a place to park their money, park documents until we're ready to close. So when I say that, what I mean is, you know, with real property, you know, what you're conveying is the bundle of property rights. You do that by signing the deed. You sign that deed over to a buyer. Well, you know, you're not going, as a seller, you're not going to sign a deed, hand it to a buyer without getting money in exchange. And as a buyer, you're not going to give a seller, you know, $500,000 in the hopes that they're going to do a deed. So you need to put the documents and the money with the third party. And that's the service part of what a title company does. Our product is actually insurance, title insurance. So what we're doing is we're insuring that bundle of property rights that's being conveyed as part of the transaction, so that as a purchaser, you know that there's value, that there's not some sort of cloud in the chain of title that's going to cause you problems when you go to sell the property. So we're performing a service and we're charging for a product. The product is the title insurance.
Do buyers and sellers need a title company to facilitate the process?
The need is like I stated before, having a third party. Is there a legal requirement? Must you close at a title company? The answer is no. You'd be a little foolhardy to not get title insurance, because you would have no way of knowing that there were issues in the chain of title. Even if you were a great title researcher, like I could go in, research a chain of title, interpret all of the documents in that examination, and I could purchase that personally. I would still want to get title insurance, because what if I was wrong? You know, if I'm wrong, I've got a huge company that acts as the underwriter that's going to pay either to reimburse me for the value of the problem or to fix it.
Is there an overseeing and overarching power that overlooks title companies?
Yes. So
in other words, are they regulated? Are you guys regulated?
Yes, absolutely. So the Department of Financial Services in Florida regulates the title insurance industry. And you are required to have licensed title agents that are subject to continuing education. Also, we're responsible to prepare and transmit to the state monthly reconciliations of our trust accounts, so that they can see that everything balances out. And so there are a lot of other controls and requirements, you know, as far as how much errors and omissions insurance we have to carry, surety bonds, crime policies, data breach policies. But the overarching, the overseeing entity would be the Department of Financial Services in Florida. And it's a statewide thing, although we are also subject to the regulations of the CFPB, the Consumer Financial Protection Bureau, as well as RESPA, the Real Estate Settlement Procedures Act, which are national laws that we must follow when we're doing a placement.
What differentiates title companies from one another?
Right, and it's an interesting question. Basically, a title policy is a guarantee, it's a contract. So the number one thing is you want to make sure that the underwriter, so we're an agent, we have underwriters. Those underwriters' purpose in exchange for a portion of the premium that we charge is to pay any claims or resolve any issues that might come up after closing affecting title to the property. Okay, so our errors and omissions insurance would cover any losses that could occur as a result of an error in the closing itself. So that what differentiates them is one, the strength of the underwriter, two, the experience and knowledge of the agent that you're dealing with. But the policy itself that's issued is a standardized policy that's approved by the American Land Title Association. But an example of why it benefits the consumer to go with a established, experienced title company is when issues arise. When something comes up, I can examine that problem. Chances are I may have been faced with it before, and I'll have a solution, a path of how to fix that. So that has a lot of value in and of itself.
Now that, Phil, that you've given us a general idea of title companies and their duties, let's go into little specifics here and just talk about how is it that title companies ensure that owners and buyers that the title that they get is clear, and explain clear, like what does clear mean?
Okay. So the first thing, and one of the things that makes title insurance unique as opposed to other forms of insurance is the ability to do research, mitigate losses based upon that research, as opposed to casualty insurance where you're insuring against something happening, a car accident, a hurricane coming and blowing your house away, that sort of thing. The way a title search is conducted is by conducting a search and examination of the geographic records affecting a particular property. And when I say that, what I mean is, let's say you're purchasing lot 1, block 1 of a certain subdivision, you would use a title plan, which is a private, it used to be done with big books that were all indexed. Now it's done by computer, but those records are held by private companies that make an entry for every document that's recorded in the official record. So I could look at lot 1, block 1 on a computer printout, or in the olden days in a huge ledger book, and see all of the instruments that were filed affecting that property. So it is the location, examination, review, and interpretation of every legal document that's been recorded in the official records affecting a given piece of property. Where that differs from what, say, the courthouse does is you're searching alphabetically. You're not searching according to a geographic database. You're searching people's names. And there are things that can affect property that aren't necessarily filed or indexed to who the current record owner would be of that parcel. So you get a more in-depth title search, and it's being done in what's called a title plan. And that's how we do our title examination.
Generally speaking, you're going to be contacted by an agent, either on the buyer side or the seller side. We're going to present you with a contract, an executed contract. Walk us through the steps that a title company would go through once they receive an executed contract.
Okay. So typically, we're contacted by the listing agent who has got an offer on a property that they have listed. The contract is sent over to my office. And at that point, we're going to initiate a title search. And we'll also do some other things like order a survey, contact any homeowners associations that the property might be subject to, as well as order a lien search to determine whether there are any outstanding municipal liens that might need to be satisfied at closing, or any open or expired permits. So the contract's set up where there are a couple parties identified within it. One of those parties is the escrow agent. So the escrow agent, as defined in the contract, is the company that's going to be holding the earnest money deposit. So as I mentioned before, we're a third party. So when a purchaser is going to write a contract on real property, they're going to put up some earnest money. That money needs to be deposited within a certain period of time, and is needs to be deposited with the escrow agent. The escrow agent is required to follow the contract as far as handling those funds. So if there's a dispute in the future, the escrow agent would go ahead and proceed as far as resolution of that dispute according to whatever the terms of the contract are. The other role that the title company plays, of course, is actually having closings. And not only have we taken the escrow funds in-house, we've also ordered the title search. Let's say we find a couple mortgages on the property, we'll be reaching out to those mortgage companies and getting written payoffs as to how much would be required to satisfy those loans. We're also checking taxes. If there are any delinquent taxes on the property, those taxes will be paid and brought current on the settlement statement at closing. So when the buyer comes to closing, he's going to have one bottom line number, those funds that will need to be wire transferred to the title company. And the seller will have one bottom line number. So there will be a settlement statement, credit to the seller for the sale price of the property, credit for anything paid for in advance, which would be prorated. And then he would be charged for things like paying off mortgages, any settlement charges that he was responsible to pay. And that would all drill down to a bottom line number. So the seller could go through a statement and say, okay, when I sell my house for X dollars, this is going to be my net. We'll also prorate taxes to make sure that the buyer is credited for taxes from the first of the year through closing, since taxes are paid in arrears here in Florida.
Say that either buyer and or sellers, representatives, agents in this case, are not happy with, for whatever reason, are not happy with their current title company. Are they allowed to switch title companies mid-transaction? Is that possible? Have you seen that happen?
Yes. Yes, there is. You can switch title companies mid-transaction. So what would be a reason to switch? So let's say that something is discovered in the chain of title. You might have one underwriter that's willing to provide coverage over that issue, and you may have another underwriter who might look at it a different way. Because remember, it's insurance. Insurance companies have underwriters. And some underwriters are going to universally agree on certain matters, and other underwriters might not necessarily have that agreement. So if something comes up and if it's acceptable to the buyer and he's okay with receiving title insurance coverage over whatever the issue is, and the underwriter that the agent is writing for is unwilling to go ahead and give that coverage, it's okay to go to another underwriter, another agent, have them talk to their underwriters and the attorneys on staff at those companies and say, are we okay to insure over this matter? Can we proceed with the closing? So that's typically why you would see someone change title companies midstream. So it's not something you want to do lightly, because remember, there's a lot of things going on leading up to the closing. You don't want to sort of backtrack and lose time. But there are certain instances where it would behoove the parties to go ahead and shop title agents and say, okay, can you give me insurance over this survey encroachment or something of that nature?
Title companies do a lot of duties. Part of what they do, you mentioned handling of escrow money,
right?
Title search, surveys, lien searches, municipal lien searches. You look at the history of the property taxes and that sort of thing. Let's just take one part of it and talk about title search.
Okay.
What is a title search? What is all involved in it? What have you seen from your experience? Issues that can come up during the title search. So walk us through that.
Okay. So when you're doing a title search, you are examining and interpreting a chain of documents that have been recorded in the official records. So unlike with a car where you may have a piece of paper that says, this is the title, Randy owns this car, here's the title, I want to buy your car, Randy, you're going to sign it over to me, done, right? So with real property, a lot of things can affect that bundle of property rights that's being transferred. So when you're doing a title search, you're looking at a chain of deeds, mortgages, and other documents that are affecting the particular property that's being conveyed. And you're looking at those deeds to see that certain things are done properly. Was it signed properly? Was it notarized properly? If witnesses were required, was the deed witnessed? Was the notary's commission expired at that time? So we may see things where the acknowledgement in a deed is incorrect. If the deed is over 5 years old, we would be beyond the statute of limitations for errors in acknowledgement. So that would be okay. And so the title examiner would say, okay, this deed was executed incorrectly. There was a problem here in the notary acknowledgement. 5 years have passed, we're okay, right? You may also find some judgments in the chain of title. Some of those judgments may be expired also by the statute of limitations. Some of those judgments may actually affect the seller, where we've got to reach out and contact the judgment holders and get payoffs for those judgments. So that would also come up in the title search, because we're searching not only the geographic chain of title, but we're searching the sellers. If there are judgments against them or tax liens or something of that nature that need to be satisfied at closing, they would be discovered in the title search. So let's say you had an IRS tax lien, the IRS would say, okay, to satisfy this lien, we need X dollars. We would get that in writing, collect the funds at closing, and pay that off. So the title search itself is basically, in very simple terms, an examination and interpretation of all of the documents that have been recorded in the official records affecting a given property.
With everything that goes into title search process, how long does it take? On average.
And that's a really good question. A typical lot and block residential property, we can do that search in less than a week. So I'm telling you that now. And what I don't want is for someone to call me and say, hey, we want to on Monday and say, we're going to close this Friday. Because remember, we're doing a lot of other things. Not only are we doing the title search, but we're then getting payoffs for mortgages we might find. We're then doing a tax search. We're doing a lot of other things that wouldn't make it necessarily feasible to close, to have an actual closing within the same week that we get the title order. But for residential property in Florida, we can usually turn around some title work within a week and issue a title insurance commitment to the buyers as well as their mortgage company. That sets forth the things that need to be done in order to ensure that new buyers own the property. On commercial, it takes longer. There are more complex transactions, usually pages and pages of legal descriptions and very complex surveys that would need to be reviewed in order to get to closing on those kind of deals.
Okay. Can you give us a real life example, Phil, of something that you've been through, you and or Enterprise Title, where you found problems, quote, defects during the title search process? So that's the first part of the question. The second part is, how is it handled? How can it be handled?
Okay.
Is it different? And is it different during the search process versus after the fact? So something was discovered after closing.
Okay, I've got a couple of decent examples I can give to you. So one would be, and we'll start out with something that might have occurred after closing. So let's say your property is in the path of a proposed easement for sewer expansion. Okay, so the city is holding some meetings. They're talking about expanding the sewer line, and there are certain documents placed of record in anticipation of that happening. Maybe they're taking the property through an eminent domain process. And as they go along with each property owner who's affected by the sewer line, they're contacting them and they're evaluating the loss of value and reimbursing those property owners. So let's say the title search does not reveal this, and then you have a closing and the buyer moves in and someone from the city shows up, with a backhoe and says, oh, we're going to start digging today. And you're like, what? That's where I'm building my deck. So that would be an example of something that would happen post-closing, where the insured, the new property owner, would then reach out to the title insurance underwriter, and they would say, hey, No one told me that my property was subject to a pending eminent domain proceeding. And now the city's here to dig a trench through my yard, and it's going to cause a significant loss of value, and it changes the way that I intended to use this property. So that would be a claim. And in that claim process, the underwriter would reimburse the property owner up to the face amount of the policy for the value of that. Or they would do an undertaking. An undertaking would be a process to clear it. So there might be a negotiation with the city to move that line, whichever would work out best in favor of the insured. So one of the things that could come up pre-closing is, let's say we've done a title search, everything looks great. We've ordered a survey, the survey comes in, we review the survey, and we see that the pool that's behind the house, as well as its cage, extends over and across the wetland jurisdictional setback line, also into a conservation easement area and a drainage easement, and that's an obvious problem. Okay, so what we would want to do pre-closing is we would work on clearing up those matters. So a very specific example that we were involved in was that very instance. The easement holders' rights were the EPC of Hillsborough County, as well as the city of Tampa that had the drainage easement, and the community development district that had jurisdiction over the conservation area. So in order to clear that problem, what needed to be done was to contact each of those agencies and have them sign a conveyance to the existing owner of the property, basically stating in a recordable form that the pool is allowed to remain where it is, undisturbed. And so that entailed contacting those 3 different departments. Those documents were obtained after public meetings and votes of the various boards that run the city, as well as the CDD, and then ultimately resulting in deeds for the portion of the pool that encroached into the conservation easement area, the drainage easement area, as well as permission from the EPC to violated the extent of the wetland jurisdictional setback line. So that would be an example of something that was not revealed by a title search. It was revealed by a survey, and then the curative documents were obtained pre-closing by the title company and recorded so that the buyer could proceed and know that he would not have any issues with any of those 3 entities in the future, nor have a problem when he goes to sell the property and presents a new survey to his purchaser.
Now that everybody's got a good understanding of what a title company is, what they do, and the main responsibility of title company is like you said, is providing title insurance on real property. Is title insurance similar to like any other insurance policy? Dig a little into what title insurance is, how it benefits the owner of real property, and kind of walk us through that.
Okay. So why is title insurance necessary? The benefit of the title policy basically is peace of mind of the purchaser. By virtue of getting that policy, he gets a contract with the title insurance underwriter, that if something should come up in the future, he'll be covered. The title insurance underwriter is going to either pay to fix the problem or reimburse that purchaser up to the face amount of the policy. So let's say you bought a house for $500,000. The seller of that house came to the closing, and it was not the seller. He had fake ID. It was a totally different person, and this has happened. So he signs the deed under false pretenses. The deed is recorded. The buyer moves in. He's there a month or so. And then someone appears at the door and says, "Why are you at my house? Why are you in my house?" And so that would be a total failure of title. At that point in time, the buyer would be able to make a claim against his title policy for the full face amount of the policy, what he paid for that house, and be reimbursed. And so that is the biggest kind of a claim that a title insurance underwriter could experience, and certainly something that we take great steps to avoid. There are internal procedures that we undertake in order to authenticate the identity of anybody who's signing documents in a closing. So that's kind of an extreme example of why title insurance is important, and why it's important in the marketplace, so that people who are buying and selling real property have an expectation that they're getting it free and clear of liens and headaches and any aggravation that could come up in the future. So in the course of the transaction, after the title search is done, what we'll produce is a document called the title insurance commitment. And it is exactly what it's named. We are making a commitment to issue a title insurance policy as long as certain things are done. So very simply, within that document, which is done in a standardized format, there will be a Schedule A that shows the current owner of the property, the proper legal description of the property, the effective date of the title search, and then there will be requirements. And those are requirements in order to insure a new purchaser. So the most obvious requirement would be that the seller signs a deed to convey title to the purchaser. And there could be a requirement that the existing mortgage on the property be paid off, and that the taxes be brought current, and that any homeowner association dues are brought current as well. So that's an example, just general requirements. You would typically see those requirements in almost every title commitment. In addition to those requirements, there may be some things like probate proceeding for a deceased owner, or examination of a bankruptcy or foreclosure case, things of that nature. So those are going to be handled, and all of them eliminated pre-closing. And the last thing to be eliminated would be the requirement for the deed, which is signed at closing. And then the other really important part of the title commitment would be exceptions to title. So exceptions to title would be a listing of those things that are going to affect this property, like the declaration of condominium for a condominium, or the restrictive covenants of the community, easements that might affect the property. That commitment is produced pre-closing according to the terms of the contract, and the buyer is given a specified period of time in order to object to any things that the title search may have revealed. An example of that would be, let's say you're purchasing a 5-acre parcel and you want to build a house in the direct center of that land. And it is discovered that there is a power easement that runs right through where you want to have the house located. In order to move that power easement, you're going to have to pay Tampa Electric $15,000. And so that is materially affecting your future use of the property as well as its value. And I give that example because it's something that actually happened. So in that case, it might result in a buyer objecting to the presence of that easement, which was unknown to them, and perhaps unknown to the seller, probably unknown to the seller. And then there could be a renegotiation, or the buyer may say, okay, well, the contract gives me so many days to back out. I can't build a house in the middle of the 5 acres, so I'm not going to buy this 5-acre piece of property. So that's kind of the way that the commitment fits into the transaction and into the transactional timeline. It gives the buyer an opportunity to object to anything that may adversely affect their future use or ownership of the property that might not have been disclosed to them at this time of contract.
Phil, is there a law that says that property owners need to have title insurance?
No, so there's nothing legally that compels someone to purchase title insurance. So if you're paying cash for a piece of property and you wanted to, and let's say you had a big suitcase and it was full of cash, right? And you walk up to a guy and you're like, hey, here's a suitcase full of cash. I want to buy your house. Sign this deed. Would the deed be accurate? Would it be recorded properly? Would the proper documentary stamp taxes be affixed? Probably not. But there's not a law against it. It's not illegal to do that. If you are going to finance a portion of your purchase, though, your mortgage company is going to require that you get title insurance to ensure that they have a good and valid first mortgage lien on the property. So for a typical closing, we're issuing 2 policies. So we're issuing a policy that's usually paid for by the seller pursuant to the terms of the contract, although you can agree otherwise. And that policy is going to ensure the new owner, the buyer of the property, that bundle of property rights they're getting as part of the transaction is good. That seller has good title to the property and the ability to freely convey that to the purchaser. But the purchaser's mortgage company, if he is borrowing a portion of his purchase price, is going to compel that purchaser to get title insurance and ensure that that mortgage is a good and valid first mortgaging on the property. So although there isn't a law that says to the consumer, hey, you must purchase title insurance, you have to have a title insurance company. Although there is no such law, a lender may impose that requirement in exchange for making the mortgage on the property, because they're making the loan, they're giving you those funds to purchase the property, so they can attach any requirements to making that mortgage that they deem necessary.
Phil, talk to us about how title companies make money. Are all title companies created equal? Is there a standard fee structure, or is it different per company?
Okay, so remember our product, we talked about a few things earlier. One is that we're performing a service, we're acting as a third party, but our actual product, what we're delivering as part of the transaction, is the insurance portion, and that's what we're allowed to charge for. So there's a premium structure involved in order to calculate those fees. And when someone says, I will charge you promulgated rate, what they're talking about is the minimum rates is promulgated by the Florida Department of Insurance. And the reason that's important and why promulgated rate is important is those rates were established by the industry in order to ensure that there are enough reserves left for the title insurance underwriter to pay any claims that might arise. So if you had a total failure of title and your title policy was for $500,000, you want to make sure that the title insurance underwriter has enough funds in their reserves to go ahead and pay that claim and reimburse the insured, the consumer, so that they haven't lost any value. They haven't lost any money by purchasing this property, and say the seller was not actually the seller and was impersonating someone else. So in a closing, 2 title insurance policies would be issued. So one would be the title insurance policy insuring the new purchaser, and the other would be a title insurance policy insuring that purchaser's mortgage company that they have a good valid first mortgage lien on the property. So typically the borrower/buyer would be paying the premium in connection with that. The beauty of it is that buyer or borrower only has to pay what's called simultaneous rate. So the owner's premium would be collected based upon the sale price of the property, typically charged to the seller, but not necessarily. It can be negotiated either way. And at the same time, since you've got 2 policies being issued at the same time on the same property, the buyer would only need to pay a simultaneous rate charge of $25 to have a policy issued at closing, ensuring his mortgage company that they have a good and valid first mortgage on the property. The other charges that a title insurance company is allowed to charge would be a settlement fee, as well as a search and examination fee. Those can range, they're in the hundreds of dollars, but in this marketplace, you typically see a settlement fee of around $500 or $600, search fee of $75, $150. If it's commercial, you would get that quoted out because those are very complex transactions that involve a lot of work in order to produce the title evidence.
Can you just go back and just specifically mention what fees people can expect to pay?
So typically in a transaction, 2 policies are issued, one insuring the new owner of the property and the other insuring the mortgage company that they have a good and valid first mortgage lien on the property. So what a seller could expect to pay would be the settlement fee, the title search fee, as well as the title insurance premium. So settlement fee somewhere in the hundreds, $500-$600. Title search fee $75, $175, $200, something like that. And then the actual title insurance premium would be according to the rates that are promulgated by the Florida Department of Insurance, and those are based upon the sale price of the property. On the purchaser side, The buyer would be paying for a simultaneous mortgage policy, ensuring their mortgage company they have a good and valid first mortgage lien on the property. The minimum promulgated rate for that is $25. They would also expect to pay a settlement fee as well to the title insurance company. And there are some endorsements to that. There are specialized coverages that the lenders require. Some of those endorsements are equal or charged at $25 per endorsement. Although a company could charge more, but $25 is the minimum promulgated rate for most Alta endorsements, although there are some other endorsements that might be charged at 10% of the owner's premium. And those endorsements are giving specialized coverages to the mortgage company, required by the mortgage company, in order for them to make the loan to the new purchaser slash borrower.
When somebody's out there looking for a title company to work with, what are the different things that they need to look for? Should it only want to work with the cheapest?
I think service and experience are the two most important components of that. And then along with those things, longevity, reputation, that sort of thing. You know, we are a corporate agent, so we have contracts with different underwriters. And what I look for in an underwriter is I want to know, firstly, that their search and examination department is up to snuff, that they are in fact using a geographic plant to conduct their title searches, which is not a requirement. There's no law that says that's the way you have to do business, but that's the way I want my underwriter to do business. I want an underwriter that's big, that has a lot of assets, that has the ability to pay claims, that has a great underwriting staff. And an underwriting staff means a group of attorneys who can answer any questions or give direction when there are issues that need to be addressed. So by the same token, a consumer is going to be, they may not know it, but they should be interested in those same things, you know. So if they go with a company that's been in business for 30 years, as opposed to someone who's been in business for a week, you have the comfort of knowing that if something goes sideways, you've got experienced people, industry leaders who are able to resolve that issue and get you back on the path to having a closing and getting the house of your dreams.
Generally speaking, title companies are going to be similar. They're not going to be exact, but they're going to be similar. So that more emphasis should be placed on what you said: service, quality, length, longevity, and that sort of thing.
Correct, 100%. So the majority of the fees that are charged are regulated. So those are going to be the same company to company. And any of the other ancillary fees are usually pretty close. So to make a decision solely based on price wouldn't be a good decision to make. You know, as someone in the business, if I'm purchasing a piece of property, I'm going to want to go with a company that I trust. You know, the know, like, and trust thing. You know, I'm going to want to go with people in the industry that I know who've been doing, who've been successfully running their agency for a long period of time, and will be able to handle any issues that might.
Who else do you need to have a relationship with in order to facilitate the transaction?
Well, there are many. So with the underwriter, remember, we're relying on them to give us accurate title evidence. We're relying on them and their underwriting staff should we need them. If there are things that come up that we need guidance on. The other professionals in the real estate business that we work with would be, for instance, a surveyor. So let's say that we've ordered a survey on behalf of the consumer. They're going to ultimately pay for it, but we did the administrative part of it. We placed the order with a particular surveyor. And maybe that surveyor went out to the property and he didn't put flags, or maybe the surveyor went out to the property and he produced a product and we reviewed that survey and there were errors in it, and those errors were things that were beyond the pale. You know, we wouldn't use that surveyor again. Same thing with lien search companies. So we're relying on the lien search to see whether there are any municipal liens on the property, as well as a permit search to see if there are any open or expired permits. So let's say I've ordered 100 lien searches from one company, and then in the course of a month, I get 2 of those lien searches and they miss some expired permits. Well, just like with any vendor relationship, I'd move on to another company that I could trust, know, like, and trust being the important features there. So the lien search company, we're essentially choosing and relying on their accurate lien searches. The surveyor, we're choosing and relying on an accurate survey of the property. And the survey is the graphic depiction of the actual real property, its boundaries, as well as its improvements. There are other vendors that we don't have a choice in the transaction. So if you belong to a homeowners association, we'll be reaching out to the management company for that association to determine things like, does the association require that a buyer be approved to live in the community? How much are the dues? What has there been a violation of the restrictions? That sort of thing. So we don't have a choice as to who we're dealing with as far as the management company. We're just determining who the management company is, reaching out to them to receive that report, which is called an estoppel letter or estoppel certificate. So that would be an example of someone that, yes, we're going to deal with as part of the transaction. There is no choice in the matter. We're relying on the accuracy of the information that they're providing to us. Just like with a mortgage company, the seller may have a couple mortgages on the property, and we're reaching out to maybe Chase or the credit union for an equity line, and we need to get payouts for that. Their payoff department, if we don't like them, that's life. Deal with it. You just gotta deal with that obstacle. We don't get to choose who the loan servicer is. These are the people that you're dealing with because they're just part of the transaction.
Right.
By virtue of the fact that they've got a lien on the property and need to get paid off.
So Phil, talk to us about some common misconceptions regarding title companies.
Well, one of the things I think that comes up is sometimes there's an expectation that, like with other insurance forms, like car insurance or homeowners insurance, that there is an ongoing premium or a need to renew. And there's not. So the title insurance premium is paid for at closing, and it is ensuring the purchaser that they have good title to the property that they're purchasing, and they can make a claim on that policy for the duration of their ownership of the property. If they do something after the date of purchase to further encumber the property, that's not something that's covered by their title policy. But everything prior, as of the date that they took titles to the property, that policy is ensuring that the buyer is in good shape. It's not going to have any worries from any of that. The other issue is that it could be conceived that paying cash for a property will eliminate the need to purchase title insurance. We talked a little bit earlier about a lender is going to compel a purchaser to insure them to purchase title insurance to ensure that their mortgage lien is a good and valid mortgage lien on the property that they're purchasing, that the money is being loaned on. But just like with cash, you spending $200,000, a bundle of property rights is being conveyed to you, and you certainly would want to know that bundle of rights being conveyed is that the seller has the ability to convey that to you unencumbered by any other liens or other problems in the chain of title or anything else. So from that perspective, it is certainly something that a cash purchaser would want to go ahead and elect to pay for and have the peace of mind that if something should arise in the future, that they would be covered. And I guess, sometimes I'll hear someone say, we've got to pay this cost. We need the function of a third party. Who needs this? Claims are never paid. That's all a fallacy. This is just a way to generate money from the public. Actually, American Land Title Association keeps track of title claims. There were 730,600 claims that have been made as of 2018. The industry paid over $650 million in claims defending the property rights of policyholders or compensating their losses. So there is a lot of value. Claims are made, claims are paid. you are getting something for the money that's spent on the title insurance coverage that's purchased at place.
Phil, you did a great job explaining what title companies do, what they're all about, and then how they're able to help buyers and sellers facilitate a transaction. Did you want to give our listeners and our viewers final thoughts, and how is it that they're able to get in touch with you?
Enterprise Title has been in continuous operation in Hillsborough County, West Central Florida, since 1988. I've got over 30 years experience in the business, and I'm very involved in our day-to-day operations of the company. I still really enjoy doing closings, meeting people, doing everything I can to make the transactions go as smoothly as possible. Even if I'm not handling your closing, you can give me a call at 813-961-3391, or you can go to our website, www.etotb.com, which stands for Enterprise Title of Tampa Bay, etotb.com, and just click on contact and say, hey, Phil, this is going on, or I have a closing at another company and this is happening, and can you explain this to me? And I'm happy to do that. At this point in my career, I really enjoy educating people on what we do in the industry. And I have a lot to share. We've closed just at Enterprise Title over 30,000 transactions. And we've got a very minimal claims history. So I'm really proud of this company and the work that I and my staff have done over the decades operating here in Tampa. Really, I think a good takeaway, and one of the most important things that the consumer could do to protect themselves in a transaction is to just verify verbally any wire instructions that are furnished to them. I mean, that is a huge important part of what we're doing, is transferring funds, acting as a third party. So every opportunity we have to impress upon anyone who's going to wire transfer funds that they need to verify those verbally with the recipient, I take that opportunity so to remind people it is still a very important thing to do.
I hope you guys found tremendous value in what Phil Clark was able to provide today, and hopefully answered a lot of your questions regarding the title, what title companies do, and about the process in general. If you have any questions, feel free to drop them in the comment sections below, and I'll be sure to get back to you ASAP. In the meantime, please, if you found any value in today's video, please give me a thumbs up and subscribe to my channel. I'll see you in the next video. Thanks a lot. Bye.